All right, good afternoon, folks. Happy Sunday. Hopefully you all are having a good March Madness-filled weekend. This is Ferris with Trade with Tex, and today we're going to be doing another one of the Sunday chart prep videos. So basically the point of these videos is to help you prepare for the upcoming week, right? Show you some of the swing trades and day trades that we're looking at. And more importantly, this does touch on the educational side of things, but if you don't understand some of the concepts like fibs, moving averages, etc., make sure to go back and watch some of our old videos first so you're not going into next week empty-handed. Okay. Now, quick reminder, if you are not subscribed to the channel, make sure to subscribe. You can share this video with whoever you like, right? Any type of trader. And more importantly, if you want to try out the Trade with Tex membership, it is $50 a month. However, we do have a free week trial. So just go to tradewithtex.com and you can join us for the live audio and screen share during the week. Okay. Either way, let's jump into it, right? We're going to kick it off with the S&P here, then we'll go over to a couple of momentum plays. Okay. So first things first, we did have the Fed announcement this week, right? We had Jerome speak on Wednesday, and of course, rates are still expected to remain unchanged, right? So they're just kind of plateauing right now. And the big concern is inflation. Now, we're not going to talk about all this boring macro crap, but what I will say is that Jerome is speaking, right? Chairman Powell is speaking 3 times next week as well. Now, on Wednesday, stocks reacted well to his speech. Normally, that is not the case. However, the big note that I want to make, because I'm still going to be swing trading next week, Jerome's not stopping me. Big note that I wanted to make is to keep following price for the S&P. There were a lot of traders I noticed, and this is the futures ticker, but obviously most people trade SPY. I noticed a lot of people missed out on the recent run-up, right? This bounce off the lows because they were just listening to headlines, right? And getting afraid of inflation when half the people don't even know how that works, right? So just follow price for the S&P. Now, specifically the prices that I'm looking at that I think are pretty significant here. The nearby one is 38.80. That's the one that's very, very obvious. I'm sure everybody and their mother sees it. That's a big support level. So one of the highlights from this week is that we actually closed above it, right? As bearish as you want to be from a 2-day pullback, we closed above the support, which means we're actually pretty likely to pop back up to our target, which is up at 39.97. Okay, still pretty distant. That's a pretty far away target. We got a lot of levels to break through before then, but the bottom line is as long as we stay above 38.80, that target is still intact. If we lose 38.80, right, let's map out the 2 scenarios here, right? So scenario 1 is that we go up to the next target. Scenario 2 would be for a potential pullback. I think scenario 1, just based off this chart, is very likely. But if we were to pull back, we actually have a lot of support on the way down here, which is pretty favorable, right? Because of this recent bounce, and we had, if we scroll this back, we had a couple of bounce attempts before we actually recovered, right? Because of that, we formed a couple of different shoulders that we can use as support on the way up, right? So the first one, obvious one, is 38.80 that we talked about. But if we were to lose that level, the next big support zone is from 38.50 to 38.57. And I say zone because that's how you have to think of this, right? A supply zone, meaning sellers, a demand zone, meaning buyers. That's the next demand zone below. Okay, 38.57 and some change. So basically for the S&P, if we crack 38.80 next week, we can actually play this leg down to 38.50. But for the most part, I'll be looking for a bounce off this area up to the overhead targets. Okay, and we're not just gonna, buy. We already did start buying on Friday, if I'm being fully transparent here. We're not just gonna buy and hold. We do have some nearby levels overhead, so I'll zoom this in to the hourly chart to show you in a sec as to what the short-term targets are. But real quick, I wanted to show you the price action before we do that. So in terms of why 38.80 is such big support, that's the trend support, right? We have a key moving average there, a key fib, and more importantly, we ran up, and that's where we used for the higher swing low last time, right? That's the exact area. So for the S&P, all trend support is sitting right there, and if we bounce off of that, we're able to hit the next target. Okay, now we talked about 2 key areas below. Let's talk about the nearby resistance briefly, and then we'll move on to the next ticker here. Basically, we're using the same key levels that we used last week. there's really no reason to change too much because this was a fairly straightforward week. But here's 38.80. We do have resistance, now technically support. I don't know, we're trading right at that level at 38.97. That's just a smaller level. The bigger ones here are 39.17.5, which is a key fib retracement right up here, okay? And then the next one above that might seem like a minor level, but it's still going to be resistance, and that's at 39.47.5. So this might seem like a lot of levels, but basically the way I'm using it, right, the way I'm analyzing it is that we have resistance up here, okay? And then the big support, the make or break, is at 38.80. So we did buy some different swing trades for the bounce, and we are looking to sell them up into that resistance and take profits along the way. Okay, rinse and repeat. All right, we're just gonna stick and move and keep on moving. Okay, so for the S&P, that's the game plan, right? Bounce off of 38.80. If that cracks, look for 38.57. But so far, these are the targets overhead. All right, as you can see, we already hit target 1 on Friday. Target 2 is right up here. Okay, and the last thing I'll say for the S&P, try to actually steer clear from the NASDAQ and the Russell 2000 this week, both of which were really tricky. IWM was all over the place, right? That's the Russell 2000. The NASDAQ, we can just look at the ETF, was underperforming, chopping, outperforming. It was really just flip-flopping all week. So kind of our saving grace was the S&P, and that's what we're going to be using to chart the market movement next week. Okay. Now, second ticker here is going to be Alibaba, which might be forgotten at this point. I don't know. We hadn't traded it in, I want to say like a month and a half. And for Alibaba, this is a stock that we trade a lot. Might not look like the movement lately is too significant, but as you can see on this daily chart, this is one of those names that has just taken a beating for a couple of reasons, right? One, China has been stepping up some regulation, which is never fun. And two, Alibaba really just has had a series of negative headlines, right? And nothing positive. So there hasn't really been an incentive for people to buy unless they're long-term holders, right? There's no short-term momentum. But here's the catch. If we break down the last couple of times that Alibaba got momentum, there's one common factor, and that's the 20 EMA, okay? EMA is just an exponential moving average. You could use the SMA as well. I think I actually have, the SMA charted up here, but it's basically the same level. And the simple rule is if we can cross above or below that 20 SMA or EMA, whichever you prefer, then we get a trend shift, right? So Alibaba, this is in play for both a day trade and a swing trade if it can hold this move. But basically, if we roll this back and we can remove all the studies, I'll load up just the 20 SMA here. Okay. This blue line failed the crossover there, failed the crossover, failed the crossover. So it has held down Alibaba quite a few times. Last time it actually popped up and confirmed the move was right here, which seems very minor, but again, that's a close not only above the 20 EMA, okay, but also above the previous swing high, which is a fancy way of saying that the trend is shifting, right? So Alibaba, the reason why last week's move was so significant is because it crossed above the moving average, right? And it's just barely below the prior swing high. Actually, if you can't get a read on this, like if you're looking at this chart and you're saying, I'm not sure what Ferris is seeing because it looks like a whole load of crap, just switch it to the next larger time frame. It's a little trick that we use in the Trade with Text chat. It filters out a lot of the noise, right? So we're going to go from the daily to the weekly here. And as you can see, this is a really clean-cut chart now, right? Lower swing high, lower swing low, higher swing high. This was the recent run-up that we were talking about. That was the 20 SMA crossover right there, okay? And notice it's doing the same thing here, where it's dropped down, put in that first green candle, and whether it's this week or next week, because it happened the same way last time, where it took a little bit of time to set up, whether it's this week or next week, as long as Alibaba can break above this high at 241.72, then that signals not only a resistance break, but a trend shift, right? and it has some very obvious upside to the 250s. So if we roll this back to the daily, I'll show you guys the targets here. So basically all you got to do is set the price alert, right? This is the resistance at 241.72, right? We don't need all the indicators on the chart. It's fairly straightforward. All we need is to stay above that moving average and this resistance. We're going to take the higher of those two levels to be safe, okay? So set the price alert above it. And if that triggers, if it's able to close that candle well, then our targets, and we will need to load up the other study set here, then our targets are 248.9. So basically 249, right? Just roughly. And then actually the juicy part of this upside is up at 260, right? Which is actually 259.48. So let's put the exact levels here so that we don't mess up any profit taking. 248.96, that's a historical level, and the 50 SMA, okay? And then you can see these fibs are lining up perfectly. The next fib up there overlaps with the 200 SMA, and that's at 260 roughly, so 259.79. Okay, keep in mind that these are also with moving averages and the price is below. And if you understand how moving averages work, that means these are going to slope downward slightly. Okay, unless Baba makes a very significant short-term climb. So the reason I'm saying that is that these are the targets right now, and they could drop down slightly lower. Right, it won't be a huge difference, but it's something to be aware of. Okay, so Alibaba, we're looking to play the trend shift here. It's a higher price stock, so you might want to go with options. If you don't play options, then just go common stock, obviously. Okay, but wait for that alert trigger. Now, next ticker is GM, and the reason why we're talking about such random stocks like Alibaba and GM and not, EV stocks or online gambling stocks is because these are the ones that are consistently setting up. Actually, beforehand, I wanted to talk about Boeing, but for the most part, Boeing gave us our money last week, and we're waiting for another setup. GM is one of those plays that really has not cooled off, right? And everything on the larger time frames is pointing to a move higher. If you look at the weekly chart, this is a pretty clean flag break, right? We got the aggressive run up, so we got the pull for the flag, consolidation. And it's so clean because it formed the higher swing low during market weakness, right? Off of the moving average on low volume. That's pretty much everything you want from a continuation setup, right? You got the lower volume, which is a common misconception. People think that's a bad thing. It's actually a good thing, right? It means there aren't sellers, okay? So we got the lower volume. We got the moving average support. And then a very clean breakout followed by relative strength, right? So it's checking all the boxes here for some follow through. Last week's candle was not ideal, but it did hit the next target, and we still got one above that up at 63.44. So it's a pretty simple game plan actually for GM. Basically, as long as this short-term trend stays intact, so as long as it stays above whatever faster moving average you have on that chart, in this case it's the 8 EMA. That's the one that I use. Okay. A lot of people use the 9 SMA. A lot of people use the 10 SMA. So whatever you use, okay, as long as it stays above that, it's intact to take out the next target. All right. We do have two levels overhead. Specifically, they are 60. So two levels aside from the target, 60 and then 62.24. Doesn't really take a rocket scientist to see that. Okay. And actually, I should have that annotated. Okay, but bottom line, those are just soft targets. The big one's up at 63.44. Okay, so GM, we're looking for a leg up. If you want something a little bit more exciting, Tesla is a much higher risk to reward play. It's also less probable because it doesn't have a bullish trend here. But Tesla formed a hammer on Friday and has a lot more room if it can clear the resistance. Okay, I know a bunch of you guys just got a little tickle, right? You just got super excited, butterflies in your stomach because I mentioned Tesla, but I don't really like the stock very much. I do like the chart. It's just not as appealing as GM. So if GM is too slow for you, you don't have as much money in your account, you need to take a higher risk to reward play, Tesla's one that's setting up for a move back up into the 700s. Okay. And I don't even like this stock, but it sets up a lot, so might as well mention it. All right, so quick recap. For the S&P, we're looking for that bounce play. We already started sizing into some swings off of 38.80. Alibaba, we have the alert set. GM is already intact, so you just need a good entry price, right? And trail a stop there. And then the last two tickers that I wanted to mention are a little bit more volatile, but these are just some that we're going to look for active trades. So first things first, I did run a ton of momentum scans over the weekend. Didn't really find too much that wasn't a sports betting stock. For me, and I'll be honest with you guys, because I do like DraftKings, I do like a lot of these sports betting stocks. They look great. A lot of these plays are overextended. They're not that overextended, but they are because we have the March Madness hype, right? So I'm just going to take a breather from them. I'm not going to trade them first couple days next week. I want to see if they can actually hold these recent pops. So for example, DraftKings, HOFV, one of the runners from Friday, these stocks, while they might be appealing based off of a fundamental standpoint, are not that appealing short term to me after Friday's run. So after running all these momentum scans, the only ticker that I found that looked half decent, and again, this is a pretty risky one, is LKNCY, right? The company that is in a lot of trouble for fraud. So if you're feeling risky, this is a pretty clean-cut chart. It's signaling a move up to 1133. Right, it's got this big gap to fill. Okay, and actually the gap is even higher than that, but 1133 is the next fib. Okay, just has to break 1017. If you want something a little bit safer, a little bit better for day trades, I'm going to be watching oil like a hawk next week. Oil, we made over a week's worth of money on Thursday on that huge drop off, and it has stabilized a little bit, but it's really simple, right? It put in an inside day, and normally when we have that kind of candlestick formation, it's a really common one, right? If you haven't researched it much or traded it much, look up the inside up and the inside down strategy for day trading. It works really well on the 15-minute and the 60-minute, so the hourly, right? Those are the two very common strategies that you see. But this is doing the same thing on the daily, where it put in an inside candle. So if it gives us an inside down, we get a big flush. If it gives an inside up, we get a pop up to the 63s. Okay? So for oil, we cleaned house with it. As long as we keep getting volume and range, we're good to go. But basically, this is a play that a lot of people don't really trade because they don't have experience with it. It's really tough if you don't. So I do recommend jumping into chat if you have the ability to next week to trade oil, but they also don't know how to. You can use USO, which is one of the ETFs for oil, or you can use one of the leveraged ones if you're feeling more risky. I'm actually not going to mention the leveraged ones. You can just Google leveraged oil ETFs if you want to find them, but I'm not going to mention them because I don't really recommend them for new guys. They're a little bit dangerous. Okay. So you can play USO, you can play crude, but basically next week, whatever signal we get above the Friday high or low, right, whether or not it gives one actually, but if it breaks through that resistance at 61.61, then expect to move up to 63. If it cracks the support at 59.69, okay, then expect to move back down to at the very least 58.33. All right, so this would be the setup. This would be the setup. We're waiting for one of those sides to break. Notice we're not trying to predict this. Oil had an inside day, which is indecisive. So we're waiting for that decision to be made on Monday or Tuesday. Okay. But that pretty much is it. We got 3 swings on the table for next week already. Most of them are growth names that we already bought and they've already gone up a little bit. So what I did in this video is I mapped out some of the ones that are setting up for more opportunity, right? This video isn't to recap how much money we've made. It's to kind of give opportunity to those of you who haven't banked yet for the past couple of days. Okay, and just give you an idea of what I'm looking at for new plays. All right, so we went over the S&P, we went over a couple of swing opportunities, and more importantly, some momentum opportunities here. Again, I'm going to steer clear from some of the sports betting plays and look for a new group to play earlier in the week. Right now, it's mainly just China stocks that are in the scans. Okay. So that being said, good luck if you're taking any of these trades. Good luck if you are playing some of the March Madness bets this weekend. Hopefully you guys have a good weekend. All right. And again, if you want to try it out, jump into the free week trial for Trade with Tex on Monday. All right. Trials start tonight. Okay. Have a good one, folks. Take it easy.